Hey everybody, great to be back here with you. Mike Fairborn, managing an option portfolio. And sitting in today, I'm not the normal guest, but it is good to be with all of you today. Folks, today I wanted to talk about really trying to take advantage of the sideways action that a lot of securities in the S&P 500 and those that have, quite frankly, a lot of liquidity associated with them have. And so I wanted to see what we could do with that in the form of an iron condor. Also wanted to talk about kind of legging in to that iron condor potentially as well with the short call vertical or the short put vertical on both sides. So we can talk about that. But looking forward to jumping in to that discussion today. It's always great to sit in for this class. And I'd like to welcome everybody here. Great to have you on board. Any questions, comments you have, those in the chat box. Join with a good friend of mine, Cameron May. Appreciate Cam being here. Lucky to have Cam on board, very knowledgeable on the topic. And folks, any questions, comments, love to have those, have you throw those into the chat. All right, well, with that, let's hit some disclosure so we can get started here. All right, options carry a high level of risk. They're not suitable for all investors. Information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as sole means of investment research. We're certainly going to be looking at that today. Investing involves risk, including the loss of principal. Now, as it states there, I wanted to also mention that rolling strategies can entail transaction costs, including multiple contract fees, which may impact any potential return. Last slide right here. We'll dive on into it. Past performance of any security strategy does not guarantee future results or success. Important to note, Paper Money software platform is a virtual trading application will not assign a short position early, which is different from a real trading account. Okay, because we're going to be looking at those today specifically. All right, so with that, let's go ahead and get sharing here. This is one of the stocks we wanted to look at, but just briefly, let's look at the S&P 500 index here and see where we're at in relationship to a long-term support level, potentially support now. It was resistance previously. You can see all the touch points that we had over here. I do like to throw in here too the simple moving average of a 200-day, which is a very frequently used moving average. I think this could be an interesting one as well because we're sitting right in the middle of it. Yesterday in the class that I taught on swing trading, we were sitting right at, I would say, it was kind of a trifecta in terms of short-term resistance. You can see we're just slightly above this level here, right, real close, I would say, to 5,800 as resistance. 200-day moving average, the 200-day right there, our line. That's another form of resistance. And we got above what was resistance here, around 5660 is now support. So it's really an interesting phase in the market right now because, we did technically make a new low here off of this point, obviously this point here and this point as well. But if we're coming down here and we're dipping below those points, what we'd be looking for is the possibility of a lower low, lower high. Or what happens a lot on these big corrections is they just take a little time. They might go sideways for a little bit. And, we'll see what happens there. I'm not going to dive in too much into this, but I think it's always good anytime you're determining, what kind of an option strategy you might be looking for, that you are referencing some of the big indices. And because quite possibly many of the stocks that you'd be looking at could be or could fit within these indices. They might very well be part of the NASDAQ 100, for example, or the S&P 500. And with that, liquidity. There could be some liquidity associated with it because we're going to be doing that. We're going to be looking at that today for sure. At least 1 million shares traded on average off the stocks that we're going to be looking at. So that's why we're referencing this. You'll notice the NASDAQ 100, we did break below it. We came back up and tested it. And I'm just going to draw over here just so we're all on board. It was support, but then when you are below it, it becomes resistance is the way a lot of traders would look at it. And it doesn't mean that it can't break through. It's just that it looks like for the last couple of days, pretty much today included, we're finding resistance at that level as well. So the question I think a lot of people have, and this is the thing that I brought up in my class on swing trading, is that, does this form now what's referred to, folks, as a bear flag type position, which could mean a move to the downside or not, and that could be across a fair number of stocks, NASDAQ, S&P 500, or whatever the case might be. Or do we kind of consolidate here a little bit? It's going to be really, really interesting to see because just as we had broken above resistance, short-term resistance on the S&P 500, we actually have shorter-term resistance right here too. And now it was resistance, it's now support where we're at right now. So sometimes these can be kind of in a sideways channel, and a lot of companies have gotten a little bit beat up on this pullback here. In fact, this point here, a lot of companies have been trending down since the market went sideways here and then down here. A lot of companies have dipped lower and may present interesting value propositions for some investors and maybe some higher dividend yields. Of course, when I mention dividends, there's always a possibility that a dividend can be cut, dividend yield can be cut as well. But I want to look at some of the companies today that have kind of come down into a range and might be caught in between what some would say support and resistance over an extended period of time, really noted as a sideways channel. Let's go ahead and just draw one of those real quick. I know you're all on board with me on this, but I just wanted to just quickly paint one out here. It normally, when you get a number of touch points through a range in here. So we've come in through a channel and, they're going to be close to this level and maybe up here, but they might be bouncing somewhere in this range. And you've seen this kind of pattern extend for really maybe several months, even several weeks to even a few months. You could have gone in that range. And it's really interesting because there might be growth prospects here, there might be value prospects, and whatever the case is, it just can't get out of its range in here. And a lot of times companies will do just this. They'll hold within a channel. Now that can present an opportunity when perhaps if we're looking to maybe sell options outside of this range. For example, sell a call, buy a call up top here, down below. Flip some colors here, but notice I'm putting these levels at or below a support level, right? Or a resistance level. So over here, we could sell a put and maybe buy a put. And if the price of the stock were to hold out within this range, sideways, then we could be in a position to potentially collect. This is what the trader would be looking to do. Collect off both sides of the trade. I want to mention this, that a lot of times traders will leg into an option like this too. So if they've seen a condition here where they've spotted off the bottom, for example, a couple of key touch points, and they said, well, by definition, that's a double bottom. Well, when we get close to this double bottom, what happens? The price of the stock has been coming down. And so put prices in general, puts will be up in value, right? With stock prices, I'll just put SP, all else equal, stock prices coming down, put prices will be up, and implied volatility could also be up as well. So what a trader might do is they might elect to put on a short put vertical first in anticipation of prices, going on back up here, at which time what they could do is then they could say, well, now I'm going to put on a short call position and try to really just enhance and try to double up or improve, not exactly double, but improve or increase the number of potential income generation here, right? Does that make sense? So that's kind of the leg in. Now, just to use the same sort of drawing here, what happens if we catch this stock and it's doing one of these, it's sitting right in the middle between support and resistance, and we're right in the middle of this range? Well, the puts might not be as high, and the calls might not be as high to the upside, right? But what that could mean is that maybe we just put the iron condor on. Whoa, what happened there? Sorry about that. I didn't even, what the heck? That just flipped on. Okay, I didn't even point up there. The iron condor on at the same time. In other words, that is the iron condor. This ultimately an iron condor, but we could put the two additional positions on at the exact same time. We could do the short put vertical the short call vertical on at the same time, because where are we at? We're in the middle of the range, and that's where a lot of these iron condors get put on at, right? They get put on right there. Okay. So that's what we're looking at right there. By the way, Carol, exactly where we're headed. That's the very first stock I wanted to pull up. So you nailed it. Are you, yep. All right. That's where you kind of like look behind yourself and see if somebody's watching you. They can see what's on your screen here, but that's exactly true. All right. Hello to you, Michelle Reisberg, Carol. As I mentioned, Troy and others joining us in the chat. Great to have you on board. But this is kind of the overall concept. And so I like to kind of lay this out so we can kind of have this in, this visual in our minds as we're going through and looking at these individually. I think many of you are very familiar with this. But anyways, this is what I think about when I think about the Iron Condor. And the other thing I think about too, which is also something that sort of attracted me to the Iron Condor in general, I thought was interesting, is that if we're wrong, and the price of the stock, let's say we have an Iron Condor on, it's in the middle of, we put it on, its price was between the two legs, and the price of the stock just dips down here, and we don't make money on the short put vertical. In fact, we lose money. Well, the interesting thing about the Iron Condor is it can't be simultaneously at the bottom down here and at the top at the same time. So we could lose lose on the short put side, but potentially gain on the plus side up top here, right? We can still gain up top here, right? Because it's going to be, you got both legs on. So that's, I think, one of the interesting kind of aspects of it as we went through that. And by the way, just a quick note over here. Yeah, I wanted to highlight that. And yeah, so it's an interesting point. The spread trading must be done in a margin account. That's one little quick note I wanted to highlight there for you guys, okay? So, and I'm sure Brent's gone through this in great detail, but I just wanted to make a quick note of that. All right, as we go through this. Okay, all right, well, those are disclosures. Let's go ahead and dive on exactly into Carol. Nailed it. It's Microsoft, or excuse me, yep, Microsoft Technology. Actually, one of the first computers I bought, like window version computers back in 1995. They used to have their own set of stores. That's when they actually sold computers. It was a while ago, but there you go. The Micron Millennial, I think. Millennium. What was before the year 2000? All right. Let's go over here. This is all about storage chips now, is Micron. But that that extended sideways channel, do you see it? It's pretty clear in here, right? Where has Micron been, folks? Let's just be honest. If we would have been selling, although short options could be assigned at any time, we're really looking for the price of the stock to hold within that range. And I was going to state that had we over here in August of last year just happened to choose this range, saying, gosh, there was resistance over here, maybe support formed here. So we'll just say like in October range, where you got a couple of support levels, a couple of resistance. In other words, you got a sideways channel. If we'd been doing ICs, Iron Condors, through this time, you see how premium could have been collected on the upside and the downside for an extended period of time? One of the things you want to be careful of too are earnings. And by the way, you can see earnings right there. We did get past earnings. And I think most of the companies, all the companies we look at today will be past earnings. So now we're looking at the possibility of selling an Iron Condor here. But we want to say, are we going to leg into this one? What are you guys saying? I'm going to just dip this down a little bit, make it more relevant to the more recent price levels. Maybe closer to 110, 105-ish on the upside. But where are we at? We're kind of like in no man's land, right? We're just sort of right in the middle. So that's maybe better positioned because we might get an equal amount or difference within the short put vertical. That's the minus put, plus put. You're always selling on the Iron Condors. By the way, a quick note over here. Do you see where my short legs are? This will help you to remember the Iron Condor. Wherever the price is, the closest to that price is always the short option on the call side up top, on the put side down below, and then you're buying the outer legs on both, basically. Okay. So here we are, we're right in the middle here, and we could put that trade on. All right. So let's do this. By the way, I just noticed in the chat too, Cam has posted in here that there's a survey link in the chat. If you get a chance to fill that out, that'd be great. Appreciate it. By the way, while we're at it too, just hit that like button as well if this is material that you like to see in this class, and be sure to subscribe, bottom right-hand corner of the screen. Okay, very good. So let's keep going. So we're kind of looking at maybe just putting on the iron condor altogether. Now, there is additional information on the iron condor and these options. You can go into the education up top here. Go under education. I've actually gone into it here, but under options, you'll find that there is the iron condor, does give an explanation of it. In fact, we have a whole section on the iron condor as well. Let me just go back a little bit, and there you go, right here. It's in options, non-directional options as a side note, just under education up top, and then education in the sub-tab right here. Course on iron condors. Those can be helpful if you're getting up to speed on this. But generally speaking, we're looking at, so what I wanted to do, let's look at the short put side first and come down here and say, well, what is this level? It's about 86, 87. I'm going to get a pointing tool so we can kind of say, about 87 along the low end. 86, I'm sorry. So about 86. 86, 87, it's right in that range. Let's see what we've got over here. But that's kind of on the put end where we have kind of been holding its support. I guess you could say all the way to about 85 and a half or so, or 85. But in that range. And so I want to look at that first and compare that to the option Greeks and just see where we're at on the delta. Now remember, again, on the delta is just a measure of looking at a $1 move on the underlying share price. If the stock price of the stock goes up $1, well, it's going to impact the option, as you can see over here, by the amount of the delta. So this range over here would be impacted by that amount of the delta right there. And when we're talking about iron condors generally, or just selling options, in this case, like a short put vertical or a long short call vertical, we'd be looking short put or short call. A lot of times traders will look at the range for the delta of a 0.2 to a 0.4. And what I wanted to do was combine that with the range that we'd seen on the stock chart over here. So what did that range look like as the price of the stock was going over here? We want to look and see where potential support is here and potential resistance is up top, and then compare that to our delta range that's normally used for the sell side of the option between 0.2 and a 0.4. And you can see, what does that range entail here for us? So we've got 85, which is right where we were. I mean, that's the real low end, right? And then here's the real high end. But okay, so we've got our range here, but now let's take this and let's make it relevant to the sideways channel here that we were looking at. And we said down below, we were really looking at about 86, I guess, 86, 87. And there's your 86, 87 right there. We can just select one of those two. But you can see it right there, okay, where we might stand. And so either of those two we could look at. I'm going to go ahead and just go with the 87. I think that was a little bit, that was kind of more recent support. Okay, and so that's a 0.26 delta. By the way, just as a side note, this is an estimate too, as the percent. They're just estimating that's the chance of us going below this 87 strike price. That's one additional thing that this April contract will do. All the contracts really, I mean, that's what you're looking at with delta. It's 27 now, but the chance of us getting below there by the expiration, which is in 22 days. About a 26% estimate is what some traders, that's how they'll use this, okay, as well. It's 27, like I said, it flipped. But that's just another note to keep in mind. Okay, so that's one thing we want to keep an eye on. The next thing is how many legs apart are we willing to sell on this? Are we going to go a couple legs? Are we going to go up to 5 legs on there? There are going to be some differences based upon what we might see in terms of the margin requirement. Let me show you, for example, if I go up top here and we sell that 87, I'll scoot this down, and we go with an 85, 87, 85 right there. So we're selling this, and I'm holding the control button down on the keyboard. Whether I'm on a PC or a Mac, it's fine. Just hold the control button down, click right there. It's a 50-cent credit right there. Okay, so 50 cents per contract is the credit we're looking at here. And let's just do a confirm. and see what our dialog box shows over here. That's $150 right there. Okay, in terms of the margin requirement. You can see the max gain, break even, etc. right there. So you can really just kind of compare and say, do I want to go with a 2 wide or a 3 wide here, whatever the case is. The one thing you will note, I'm going to just give you a quick comparison on the 2 wide, is their max loss is 150. 150. And you might say, Mike, why are we risking 150 max loss when we're only going to make 50? Well, because we just remember we looked at the delta and we said on the chart there's support there as well. So there's just maybe a lower expectation, 27% chance of it going below, and that's the difference there. That's why we're willing to take less in terms of a potential, income return, or I should say just the premium relative to the potential loss, right? There's just a better chance of, according to what we're saying right here, with a potential gain in there. And that's what some traders would look at. It's not a guarantee, obviously, but it's less than. Okay, so that's a consideration. The next one is I'm going to change my little leg down here. I'm going to put it down to a, you know what? Let's just do extreme. Let's just go 80. Let's see, we did 87. We'll do an 82. Let's do a 5 wide. That's not trading. Okay, you're right. It's not trading. Okay, how about an 83, a 4 wide? I want to get something in there. Okay, so there's an 84. At 91-cent credit. So it's a better return, but let's compare that to our potential risk now. Okay, so now the risk, the max loss here is 309. So it's more than doubled, right? 150 times 2. It's more than doubled that. It's greater than that, actually. So that's what you get for what? Well, about $41 extra. You get more than double the risk. In terms of max loss. I mean, I should say more than double the potential loss. Not risk, just the loss. Okay. I was kind of in the terms of risk versus reward type thing, but there you go. Okay. Okay, so that's a consideration. So I'm going to go ahead and just stick with the 2 wide. The thing you can do to help kind of bridge the gap here, make it even more worthwhile to a degree, let me just show you this. I had just shown you we did a 2 wide here relative to a 4 wide. But what if I added one additional contract in here? What happens? Well, we know that our potential gain is going to double to maybe 50. Okay, you want me to do this as a comparison? Watch this. Yeah, okay, there we go. We'll lock that down at 50, just as an example. Okay? Look at this. So, it's 300 is less than 309 on our 4 wide. And 100 is greater than 91. So it wins here and it wins here on both fronts, just by adding in that additional contract. Now, as I did mention, with multiple contracts, there are multiple commissions, something to be mindful of. But interesting, right? And sometimes this difference is even greater as well. It can be substantially bigger too. So just a consideration there. All right, so let's do this. I'm going to go ahead and just do a 2 wide. We'll do a couple contracts as an example. That's our put side, but I wanted to put this on as an iron condor. So I have an idea of what we're looking for here. But let's do the same. Let's do a comparison on the call side, and then we'll put them all in one shot, okay? So the call side, again, as we were focused in on that, we look at this over here. We can go over here and take a look and say that it was about 108. 108 to 110-ish in that range for the more previous high range. We could say 110. Oh, I'm sorry. That's 106 and that's 10. Yeah, I'd just say 108-ish, 108, 109. Okay. Question coming in, though, from Moxie real quick. Just on the minimum, the open interest, because we're heading to it right now. A quick note on that as we look at open interest over here. A lot of times, traders will look to get at least in the hundreds here. Hundreds. So in the 100 range, when we're all set there, clearly over here we're not over here. It looks like some of these are newer contracts. Okay, they're newer. But you can see that we have 13 million shares today. That's an interesting note. These are a little bit lighter here, but you can see in comparison, look how tight the spreads are still. So it tells me that even though this one's at 12,000, for example, on the put side, plus this 87, it's almost the same. I mean, in terms of the spread between the bid and the ask. So it looks like they might be pricing all of this very, very closely together. You get the same here, and that's got 22,000 and change in terms of contracts, but really in the 100 range is what you're looking for. I think one of the things too is you're looking for the volume over here too, on the stock itself. That can help to facilitate things, but you want to check that open interest as well. All right, good question. Okay, so let's get into this. We were looking at the other side here. And let's see, we said on MU, just a quick refresher, it was it's much higher, isn't it, though? I mean, 108. So we're a little bit further away on the upside, no doubt. But yeah, right, the 108 range. And are we even here in the 108? No. And how do so a couple of things we could consider, because to get to 108, I've got to really increase the number of strikes up top here, which I just did. And here's your, oh, I just didn't scroll down. Oh, there, okay, I'm still not there. 40. Wow. Okay, look at our delta now to get to the 10. I guess there's a 107 and a 110. Not exactly perfect, but we're all the way outside of this range in terms of our delta here. Remember the 0.2, 0 to 0.4? On the call side here, clearly. But we're looking over here and we're saying, well, where's our 0.2? It really ends right there, folks, at 102. I don't know if you're comfortable with that. It happens to be about 10 points higher than where we are right now, about 10 points. We're about 192. It's close to it, approximately 10 points. We are at 92.50 right here. And so that could be considered a cutoff. It's okay to go below it, too, if you wanted to. Maybe we could kind of split the difference here and say, well, here's a 12. It's still quite a ways down, but you're still getting premium over here. Okay, so let's look at the 106 versus the 102. Notice I'm just being very, very careful how I set this up. This is above 100, but we've had a tendency to break above that level. One thing a trader could do is they could wait for the price, like they could still potentially leg into this and wait for the price of the stock to come up to resistance and then sell like a 108 to 110 level up top here, minus call, plus call up here, get your short call vertical in and complete the iron condor. That's one consideration. I'm gonna just go ahead and put one on anyways, but I want to put it outside this range at least, and that range is about the last high and the 200 period moving average, which, by the way, we've done an excellent job bouncing off of 1, 2, 3, I would say 4 and 5 times. So that puts us, maybe we could just use this range, and I believe that range is about 104. So let's just see what our 104 is over here. It's going to be a little bit higher. Okay, so it's a delta of 0.15. Not to say we can't go below 0.2, but we're putting in reference there where the last resistance is at. So I'm going to sell this one, and we'll do this one as a 2 wide as well. So we sell in this side, the bid, and I'm going to click on the ask down here at 106, and that's only a 21-cent credit. Okay, I'm going to go back over here to our short puts. We're going to click on hold the control button down again, 87 and 85, and notice by holding the control button down the entire time, look what we got. Told us right there, just confirmed it for us. That's where I always like to look. That tells you right there, hey, you're probably on the right path. You probably set this up correctly. Let's just double check. There's our call. There's our minus call, plus call. Okay, low strike, high strike. There is our minus put, plus put, high strike, low strike. That's right. It's an iron condor. We've got that in place. I'm going to go ahead and add one additional contract there, and let's take a look at this now. We'll lock it down at 73, for example, so we can do it. We can take a look at this and see what we've got. Okay, so this collectively, relative to our max loss, as you can see up top here, let's see, that positions us. Yeah, I mean, remember what we were looking at before when we were just doing the short put with 2 contracts? It was 300 on the max loss relative to about 100 on the max gain. Well, look over here with the iron condor. It's improved. It's improved. what we were able to do, even with a lower delta on the call side, the max loss is, well, let's see, max loss comparatively speaking, I'll put it in a different color here. Sorry. 254 for the loss side. So loss, as you can see, max loss, but the credit over here, potential credit, is 146. It improved our overall risk to potential reward. So the R&R is a positive there. You see that relative to just the short put that even had the higher deltas associated with it. This was the comparison we've made before. Let's go ahead and send this trade in as an example right now, but this is putting it all in one shot. So there we go. That is the trade. I've had it at 73 cents. Let's just see. These do take a little bit longer, even on the paper money account. But the key thing here is a lot of times when you're going to get those fills, folks, this liquidity can make all the difference in the world, right, in getting the fills. Very, very tight spread, and they are liquid options as well. Okay. All right, let's continue on. Do we have any more? Remember, we're looking for that sideways channel. And here's one for you. DLTR, Dollar Tree. Look at the sideways range there. It's quite, it looks like it's really, really a tight range, but actually we had dropped so much in the price before we came to this level that it's just really made this price action look tight. Let me show you this. If I were to go over here and just zoom in on this range, for example, and actually, well, okay, so there's the 200-day moving average. That's gonna mess us up a little bit too. But like, say for example, if I just go like that, it'll still help a little bit. Yeah, it's coming from a high range, so not as much, but it's still from the bottom here, 61 to about 75, about 76, so about 15 points, pretty much 15-point range over here from high to low. We did just get past earnings today. Some traders might want to wait an additional day just to see if there's strength to break up above here. The one thing I will say, though, is, yeah, we're clearly below the 200-day moving average, which is coming close to that level. There's the fill on the Aaron Condor right there. Okay, that was for the 70. That was for the same sort of risk-reward potential scenario that I'd shown you previously. Okay, so here is DLTR, though, that range. Let's put this one in and take a look at it. So let's compare. What's our bottom range? So about 61, we said. So 61 and about 70, 75, 76. I'll say 75 to 61 right there. Right, generally in that range. I'm just putting that in as the first step. So now I can scoot on over here and say something like, okay. By the way, I have been using the shorter term range on both of these. Well, we're using the April monthly contract, okay? And normally, a lot of times traders will look for 20 to 50 days. We're still in that range. You could go out a little bit further. I kept it a little bit tight on these because we have both legs on at the same time. And I just figured, hey, if you can get a shorter time and it still makes sense, we can kind of go from there. All right. So let's do this. Let's go over here now and look at we have the 61. Oh, wow. What happened here? We have great liquidity. Well, pretty good liquidity all the way down. This trades 11 million shares. And then all of a sudden we get zero here. Wow, that is really strange because you could see that I think there's something going on with the pricing perhaps. I don't know if you guys are getting this, if anybody's on a different account, but that's what I'm seeing. This is in our demo, paper money account here. That doesn't help us there at 61. We only have 17 contracts here. I think this is I don't know what happened there. Not too much. I'm going to do this. That is really, really interesting. I'm going to go out just a little bit further. We can even look at the May if we wanted to as an example. We're just looking at examples here anyways. Yeah, we got plenty of, no, we don't have good liquidity here at all. The May? No, we don't have the contracts. We're back to April. Okay, By comparison, though, let's go through the example anyways. And so that shouldn't be, obviously, it's not zero. The 60 is even higher here. But if I did even a 62, I want to show you one that we can actually, use a couple of these legs on. But let's just do this one. What does this look like? The 62 versus the 60. I'm going to sell the 62, buy the 60. It's only a 22-cent credit, but the deltas are way low as well. Okay, so we're really not, I mean, it's still not, even if we chose a higher level, the delta is not at 20. Well, of course, we did that on the last one, but you can see it's a lot lower. It's 22 cents, $22 per contract. Let's go ahead and just look at this right here and just see what the dialog box says for us. Okay, so it's 22 cents, but yet the buying power effect is 178. Now that's not even with the same general implied volatility. This is why these comparisons are great to do. We might have to switch to the next one I've got here. But see the Vega? We were very close to that same number on, I think we were in the high 40s for Micron as well. Even with that, look at this. With the lower delta, as a comparison, we're just way out. It's 22 cents versus 178. So that's just like, that's not even that great. Let's look at the call side over here. It was 75 we were looking at on the upside. Yeah, see the spread's a little bit wider here too. Look at that. Oh, wow. Substantially wider. Now, it might very well stay in that range, but I'm wondering, folks, this is what I'm wondering. I did not see this earlier today, and I'm wondering if this is, it probably is. It could have something to do with this right here. The fact is that we just reported earnings this morning. They might still be getting it. This might take a day to get organized. Maybe tomorrow would be a good time to look at it. So let's go to our next one, and we can finish off with this one. But here's SLB, Schlumberger. Okay, so it had been downtrending for a while, but more recently, it's, well, maybe we have a higher high over here, or whatever the case is. But we can see that there is, generally speaking, a sideways channel here, and a sideways channel perhaps through here somewhere. I know we dipped a little bit below that, kind of a range within here. So here's another one to look at. This is a little bit more interesting. We are right at the 200-day moving average, and we've been struggling at that 200-day moving average. If we thought that we were still going to hold in this channel, we're a bit away from the lower range. Look how far we are away, folks, from our puts. We are ways away. Here's the puts down here. Selling these are going to be just, I mean, you're going to get very, very little from that. So this could be truly a case of a potential leg in, iron condor leg in. So we'd be starting off with the short call vertical first and seeing what happens from there. Now remember, this is only in anticipation that these levels over here, and we got a 200-day as well, very close to it, but these levels, previous levels, are going to hold right around 44. Okay, so 44 to 45, well, yeah, 44, 45. Let's look at the potential for a short call vertical here, legging into it, using just the same month. You can see we've got nearly 5 million shares already traded over here. Here is your 44 right there. Okay, okay, so we know that fits within the resistance level, 44. It's right at resistance. There's the spread. Does that check? I give that a check. It was a little bit higher here. Just jumped up, but it was about 3 cents a second ago. We're in the 1,000 range for open interest. And if we come over here, are we less than 40? We are less than 40. 36 is less than 0.40. That fits there, right there, the 44. If we did it too wide, what about the 44 to 46? 44, 46. What does that look like? Starting off, legging into a potential iron condor with the 44, 46. Just the short call vertical first, right there. Open interest, implied volatility, a lot less, but still above 25, getting close to 30. A 47-cent credit per contract here. It's a lower price stock. It's around 40, $43 or so. Confirm. Let's just take a look at this and see what we got here. Okay, so I actually have, it looks like I've got a paper money position on this, so we're not seeing a margin requirement. That's not true. There is a margin requirement if you don't have an existing position on it. I think I do have like a paper money stock position on it right now. But there's your max loss comparison. So 153 to 47. Okay. That's the general range. It's very, very close to what we were seeing on the Micron short put. Remember that? That was about, what was it, 41 to 150. This is a little bit better, I think, just slightly, comparatively speaking. But there's your max loss. There's your credit there. Let's go ahead and put this trade in right there. Okay. And we'll see if we get a fill on that. Does that make sense, folks? This is the leg in. So we've got the trade in over here. It's pointing it to this level, but we've actually got this short call vertical right here. We're taking advantage of a couple of things, and that is this. There's been a long downward trend. We're below the 200-day. In fact, we're sitting right on it. There is the possibility of resistance right here. And if we bounce off this level and come down, well, then we could potentially put on the short put vertical, the SPV down below, and create the IC. But it's going to all have to happen pretty quickly, right, for that to unfold while within that range. But I wanted to highlight this for you. You know, it's been stated, a lot of traders will say that, you know, a majority of time, prices don't tend to trend. They tend to go sideways, or, you know, a little bit more flatter, so to speak, into a sideways channel. I think the Iron Condor is an interesting way to try to maybe generate income off both sides, short call side, short put side. Those are vertical, short call vertical, short put vertical. You know, combining those together or legging potentially into those. Now, also on that leg in, there's not always, you know, you're not always going to have that situation where you're going to be like needing to leg in to create the Iron Condor. Sometimes it just sets up that better that way. In fact, I've had trades like this that have kind of bounced around towards the upper end of the range and never really did a move down towards the bottom where I could sell the short put vertical. And I've had the exact same thing happen on the other side, where I've just stuck with the short put vertical too. But it is something to be mindful of. And I wanted to point out too, that sometimes those potential risk and reward relationships are better and even, you know, decently better when you're doing an Iron Condor relative to just adding up on one side or the other. So hopefully you found that informative. Again, smash that like button if you found it useful. That is the goal of these discussions. Great to fill in for Brent. I really appreciate Cam's discussion here. Folks, love to be here with you guys. It's so fun to talk about options. I don't talk about them very much in my other classes, but a little bit in the swing trade class where we do take some of those same sort of moves, just the sort of the portion of the move that we're looking for. You'll get that in a lot of the, well, swing trade type ranges too, off the bottom, highs and lows, which, by the way, you can trade the swing trades, as I was looking at over here, just as an example, off these moves. In fact, a swing trade is really kind of, it does fit into the same sort of realm that we discuss in terms of some of the bull flags we look at in that class as well, because you're really looking at maybe, in a lot of cases, that 3 to 10 day range is kind of the focus for the swing trading. And if that's something that, you know, you'd find helpful, if you want to take a look at that, I'll just quickly just point out, folks, you can follow us. We have other content that's listed here. Oop, I'll clear that off right here. But here are some of the playlists. I just did one just yesterday talking about combining multiple time frames here. And I'm just going to put this in real quick so you can see it. If you are, in fact, interested, here is that playlist right there. And I will post that into the chat. But that just gives you some of the technical perspectives that we talk about as well that can be helpful and different indications in terms of changes with price and things like that. Well, on that note, everybody, we're all set. Have a fantastic rest of the day. It was good being here and going through this. Hopefully, you know, found it informative. See you next time.